Hi everyone, welcome back to Corporate Decoder, the place where we decode the corporate mumbo jumbo so you don't have to. Today we're diving deep into a report from Helmerich Payne. And let me tell you, it involves a lot of exchanging notes. No, not the kind you pass in class, but the kind that could make or break a company and its investors. It's like a high stakes poker game, but with way more paperwork. Before we jump in, if you are into getting straight insights from corporate documents, make sure you are subscribed. Also, we have a Discord community linked in the description below. Now, Helmerich Payne just extended an offer to exchange some of their older debt IOUs for newer, slightly different ones. It's like trading in your old car for a new model, but instead of a car, it's millions of dollars. The interesting part, they're trying to swap up to $1.25 billion worth of these IOUs. But why, and what does it mean for you and the company? Let's get to it. First off, what's going on here? Helmerich Payne are trying to get people to exchange their old notes or debt for new ones. These are called senior notes, which basically means if the company goes belly up, these note holders get paid before some other creditors. The company had an offer to exchange these notes and they extended it. The exchange was set to end in June, but now has been pushed to mid-July, unless they change their minds again. They are giving old note holders extra time to do so. Think of it as giving people more time to return a product to the store. Now, here's where it gets interesting and we can get into the numbers. This table basically shows how much of the old debt has already been offered up for this exchange as of the original deadline. Let's start with the old 2027 notes. These are notes originally worth $350 million. Of that amount, almost all of it, about $349.7 million was offered for the exchange. That's almost 99.9%. So practically everyone who had these wants the new version. Next up are the old 2029 notes, also starting at $350 million. Here, about $330 million worth was tendered or offered, which is about 94.3%. Still a very high number, but it seems like a few people are holding out. Finally, the old 2034 notes, these were originally worth $550 million, and almost all of them were tendered, $549.2 million or 99.9%. Again, almost everyone jumped on this EXO. What's the big deal? Why are they doing this and why are people taking the deal? Well, often these exchanges are about making the company's debt structure more manageable. Maybe they are trying to spread out when they have to pay back the money or get a better interest rate. For the note holders, these exchanges can offer slightly better terms like a bit more interest or a safer investment. The company mentions this form as part of a bigger registration statement they filed with the SEC. This is required so that everything is transparent and investors know exactly what they're getting into. Basically, they want to make sure everything is by the book. Okay, so let's zoom out for a second and talk about Helmerich Payne. They're a pretty big player in the oil and gas drilling world. They provide drilling services and equipment for exploration and production companies across the globe. Now, the oil and gas business can be a bit of a roller coaster depending on the price of oil, demand, and a bunch of other economic factors. These factors definitely influence their financial decisions, including why they might want to shuffle around their debt funds. So what do we take away from all this? Well, Helmerich Payne is trying to optimize its financial situation by exchanging old debt for new debt. The high percentage of tendered notes suggests that most investors are on board with this move, likely because the new notes offer some advantage, or maybe they are just happy to stick with a company they trust. This move could allow the company to extend the amount of time they have to pay back notes or find more manageable interest rates. Now looking at this, I think Helmerich Payne is probably trying to get ahead of any potential financial challenges. The oil and gas industry is known for its ups and downs, and smart companies prepare for leaner times. By managing their debt effectively, they can ensure they have the flexibility to operate and invest, even when the market gets tough. On one hand, this exchange indicates the company is actively managing its liabilities, which is a good sign. On the other hand, it also suggests they might be anticipating some financial headwinds, otherwise why bother? It's a bit like seeing a weather forecast predicting rain, so you grab an umbrella. It's a smart move, but it also acknowledges the possibility of a storm. In conclusion, Helmerich Payne's note exchange is a strategic move to optimize its debt structure and improve its financial flexibility. It reflects proactive management in a volatile industry, and while it's not a guarantee of smooth sailing, it certainly gives them a better chance to weather any storms. Alright, that's our breakdown of Helmerich Payne's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Do not forget to check out the Discord in the description. Thanks for watching. See you next time.